Well, good morning, everybody. Thank you for joining us for day 2 of the NPL Management Europe event. We are kicking off day 2 with a look in Western Europe, the NPL situation, and I'm very happy to welcome these gentlemen to the stage, plus one gentleman, Marco, joining us virtually. I'll hand over to you, Adrien. Thank you very much.
Thank you. All right, let me introduce you to our great panelists today. So starting with Alexander Holzgreve. Alex heads the acquisition side in Europe for Invenio Financial, part of Philippe & Co. Associates, and also covers the sales and for debt collection services in the area of DC's account management in Germany. Originally, he was a credit risk banker for more than 15 years. Alex moved into the workout and debt purchase space in 2011, joining Active Capital, now PRA, and ran the European consumer debt purchase side as part of the European management team. And he will give us his view from an investment perspective.
Sure.
Then you have Xavier Tzinmann. Xavier is a director at Societe Generale in the asset-backed product division. He's focusing on NPL advisory for Northern Europe and has been involved in NPL portfolio sale advisory mandates in France and financing across Europe. Xavier has about 15 years of experience in various asset-backed products and securitization, covering Germany, France, UK, Spain, Italy, and Russia. And Xavier is currently based in Paris and previously was in London. And on the video, Marco, hi. So Marco Angheben is head of business development, in regulatory affairs at European DataWarehouse in Frankfurt, where he started in 2013. Previously, Marco was involved with a team of advisors in the implementation of the ECB ABS loan level initiative, with actually LCM in London. Marco worked in a number of roles at the Association of Financial Market in Europe, as well as the European Securitization Forum. It developed with rating agencies and other industry experts reporting templates for ABS, research reports, and was involved in a number of industry initiatives to foster transparency and restore investor confidence for ABS across Europe. So he will come from a regulatory background, and I forgot to say that Xavier is more from the sales side background, although he's speaking his capacity as an advisor for SocGen. And myself, I'm an investment director at LCM, responsible for our investments in France and Spain. LCM is a debt purchaser with a mandate to invest in granular loan portfolios, performing, non-performing, across asset classes, SMEs, and individuals globally. We have 4 billion of committed capital from a set of different LPs, including pension fund, family endowments, in the US, Europe, and Asia. So that's the intro of the panelists. So let's start now. I'll start this panel with a figure, 160 billion. 160 billion is the combined level of NPLs carried by French and German banks as at the end of 2020, which represents roughly a third of the total NPLs in Europe. So historically, Western European banks, and in particular German and French ones, have not been very active in selling NPLs, unlike the Southern European and Northern European peers. So therefore, our discussion will talk about the potential impact of the pandemic measures and how we expect this to impact the banks, or the Western European banks, in particularly in those two countries. So, starting with the first theme, after the pandemic, or at least what we believe is the new normal, and the number of measures taken by European governments and ECB, which has provided lots of liquidity, how do you think things will unfold for France and Germany in particular? Xavier, Alexander, or Marco, who wants to take this first?
Well, I can make maybe a few comments. So first of all, to answer your question, I think we don't have the crystal ball yet. I think talking about a German perspective, so to speak, the German market, I think the banks have been extremely resilient. And this comes down also to the point how the German banking market actually looks like. We have half of the market actually in the hands of union and savings banks. They are very granular, and they have been extremely conservative in the past in terms of lending. So the NPL ratios have been historically low there anyway. So the pandemic itself hasn't really played out that badly on German banks. You talked about the high, NPL volumes. The question is always, right, look at the German or French banks. where are the NPLs? Are they actually domestic, or are they in investments that are foreign? And that's, I think, the critical role that one has to consider. I mean, some banks have been extremely active in disposing NPLs. Commerzbank, for example, when it came to shipping, and they do this mostly themselves. The question forward is, did the measures were the measures successful? I think so, yes, in Germany, especially also the state aids when it came to furlough. That helped a lot, through the pandemic. Now the question forward is, I think we're in the new normal right now. We need to live with the coronavirus. It will be part of our everyday life. And I think the economy is slowly adjusting to that. Talk about home office, etc. So, is there going to be an NPL wave because of that? I don't think so. I haven't seen it, and even with state aids, etc., running out, at least the German market has shown, significant resilience to the impact so far.
Thank you. Xavier, do you want to comment maybe more on France, please?
Yes. Hi, everyone. First of all, it's interesting to note the difference with the German market. In the figure that you mentioned, 160 billion for the combined two markets, 120 billion is attributable to the French market. So,
that's right.
so the very large majority of the stock is owned by French banks, which, by the way, doesn't mean that this is French debtors. It's French banks.
Exactly.
That's your point,
Yeah.
and that's interesting to note. That's one thing. And just to put things in perspective, the French market, or the French stock of NPL, is the largest in Europe. And that's sort of a new trend since a couple of years. So it's not anymore Italy or Spain which are leading the fiesta for NPL. There are so the French market is sort of very much capturing attention from investors and regulators and stakeholders, etc. And banks, also French banks, are very mindful about this volume of NPL. Now, about your question, how things will unfold, I have seen different answers. If you go back to 2020, at the sort of at the heart of the storm, you had IMF figures that were mentioning that the stock for the French market was 120 billion and could increase up to 170 billion. So at this point in time, I mean, people were expecting that the market would, explode in terms of NPL exposures and sort of further problems for the economy and the debtors. This figure remains in the books and the internet, etc. So, but you hardly see now in researches or in public figures people trying to forecast such a vast disaster for the economy, for the NPL stock. You generally see today explanations around growth, GDP growth, which is now recovering fast, insolvencies, which are rather low, either personal insolvency or corporate insolvency. So similar to arguments that you listen, you can have for Germany or the market, you tend to focus on what is sort of the outcome of the crisis, and then you focus on GDP growth. So you had -8% in 2020, and there tends to be a consensus these last months, this week, with IMF and other institutes putting some figures, which is recovery is ahead. It's strong for 2021. It's solid for 22. I mean, roughly for France, you would expect 6% this year, a little bit above than 6%, and then 4% next year, and 2% the following year. That illustrates to me the fact that previously people were saying we don't know. Today, they were saying we don't know because COVID, no one knows, etc. And today, people tend to put the same answer, which is we don't know, but we know that in 22, it won't be a disaster. We know that in 22, there won't be a lot of NPL volumes due to COVID. So the old problem remains. How things will unfold. People tend to say it will unfold in 23, maybe 24. And that's what, that to me, that looks like the consensus. And we are not talking today about, there was also this, this fashion for commenters to say, okay, you will have a V shape, a W shape, or L shape. People do not sort of get into this kind of description. There is more visibility for the immediate future, for 21 and 22, and the sort of question mark remains for 23 and maybe 24, and that's probably how people tend to see it.
Thank you. Marco, if you are on the line, do you want to comment as well, please?
Yeah, thanks. I think from the data that we saw from European DataWarehouse, we don't really notice any particular credit deteriorations in the securitization pools. The other interesting part is that also the banks have been flooded with liquidity, for example, with measures for pools of additional credit claims. And those are private pools that are pledged with the National Central Bank. And we have seen a big growth over 2021. So the reality is that the banks have a lot of liquidity at the moment. And at the same time, we are not really seeing from the low-level data any immediate problems.
Thank you. I think we see effectively a low cost of risk across Western European banks. And I think the question is, so how companies which have been supported by the governments will pay back their COVID loans at the end of the day? Because there has been a lot of liquidity provided, to Marco's points, and how do we expect this to go going forward? Maybe Xavier or Marco, do you want to take that one?
On this one, just to sort of focus on the French market and put things in perspective again, the subsidized loans or the guaranteed loans to French corporates amounted to 140 billion as of September this year. So that's one very large figure. And a recent study also mentioned that this is 1 out of 3 French companies that have been using this PGE, guaranteed loan. So it's been very massive. It is part of what the French government and the French president called à tout prix, at any cost. So saving the economy at any cost, and this is pretty much how they have done it. What I've seen today is that these loans are actually performing well, in the sense that we haven't seen defaults on these loans with particular default rate, which is very, very high. So that's not the case. These loans are long, so this is too early to form a view. But some studies also show that companies have used this loan, have tried to get this loan to secure liquidity. So the gross indebtedness of the companies has increased, but the net indebtedness of the companies has remained stable, meaning that the money has been raised and kept for security purposes to ensure liquidity. And then, the expectations of the main scenario is that these monies, these loans will be repaid. Because the money has not been used and because growth is ahead, so it's not been used for investment. And by the way, it's not great either, but it's not been used for investment. It's not been burnt in a widely manner to ensure survival of the company, because all in all, The crisis was severe, it was difficult, but companies didn't need massively to use this liquidity. So the vast majority of these loans are expected to be repaid. In this study by the IPP that I've been through, it is mentioned that only probably 1% of these loans are may default. 1%, 14 billion. Still a high figure, but if you share it, among the French bank, they probably have 20% each of these loans. So you're talking about 300 millions of exposure for each bank, of exposure in terms of GBV. That's manageable. That's not a massive disruption for the French banks, expectedly. On top of that, the analysis that starts to emerge is that only certain sectors will be severely affected. So restaurants, leisure, hotels, etc., are going to be more affected than others. All in all, these PGEs will be massively repaid in their vast majority, and for some of them they will be defaulted. But the amount of default is going to be, all things being equal, according to the latest studies, manageable for banks and manageable for the economy.
Okay. Marco, do you want to give your view, please, from your regulatory perspective?
Yeah, I think all the governments are basically trying to focus overall on going to pre-COVID levels. So that's probably the way that they are trying to reduce their indebtedness. I think the other interesting thing, and I echo what Xavier was saying. Hello. And is actually there are some sectors that are going to be clearly affected. The hospitality sectors, for example, shops, restaurants, we can clearly see already in the data that so there has been some clear deterioration. But for the majority of the other sectors, the performance is pretty good.
Okay, thank you. So clearly in the current context, Western European banks are still carrying a lot of NPLs on their balance sheets, although we recognize the level, so the absolute percentage is quite low compared to Southern European peers in particular. So the regulator and ECB have been increasingly pushing NPL divestment to anticipate any issue and prevent from any financial crisis. So what do you think the main measures which have been pushed by the ECB to constrain and push the European banks over the past few months or years will be at the end of the day, post-pandemic or in the new normal? Alexander, maybe do you?
Yeah, talk about harmonization of that sales, trying to implement, platforms across to lower hurdles. Personally, as an investor, I'm not so sure it's going to work out, but that's just a very subjective view on matters. I think the complexity for some of the products that are subject to disposal by the banks is still a limiting factor. Also, the risk appetite will determine whether people are happy to go through a platform to acquire that, or whether they're going to still do what we see nowadays in most of the cases still. Bilateral deals or auction-based deals that are run by the originator themselves. I think a harmonization in general is a good thing, but I'm still questioning whether too much influence by the regulators actually is good for these particular type of deals, especially when we're talking about a distressed situation, be it a corporate, in underlying real estate, or be it consumers. Whilst the consumer side might be, in general, more protected when it comes to, them being in default and requiring special attention from a state's perspective as well. I think the market so far has done well. I do understand that there is pressure, to keep, to avoid that banks incur losses, whilst foreign investors probably take profitability away without necessarily returning part of that profitability back into the economy, where it was generated in the first place. So I do get that, but I think in general, harmonization is fine. Make it more transparent to some degree, but run those deals over standardized platforms to some degree, and for some products it might work, but as a general approach, personally, I still doubt this is the right way forward. And we have seen too little progress anyway on that front. It's been discussed for years, and that shows you how complex that particular item is, to find a common consensus across Europe, both from investors and originators.
I agree. Xavier, so France has been, slow in selling NPL up to now, and with these measures from the regulator and ECB to commoditize NPL sales, do you think French banks will be a bit more, active on the NPL front? Or how do you think these measures will impact or will be effective?
In that respect, I see three kinds of incentives or measures that have been positive for the more animated NPL sale in the French market. So again, just for the audience and just to be clear, the French market is lagging behind in terms of NPL volumes being offered for sale. I mean, it's not a mature market, as is the case in Italy, Spain, or for other reasons in Germany, which is probably more educated and more used to sell NPL regularly, same wise as the UK, for instance. So the French market has been lagging behind, hence probably an explanation for the high volume of the 120 billion of NPL stock that we mentioned earlier. Having said that, what has changed and what is a good incentive for the French bank to be considering portfolio sale is regulation. Regulation with a backstop, with the provisioning calendar, is sort of a serious incentive for banks to consider portfolio sale and more active NPL management, certainly. That's a coercive approach for banks, but in a way that works. I mean, we hear that French banks are mindful about these aspects, and they want to be more active in NPL management for this reason at least. The regulator has been also helpful in that respect. If you think about SRT, capital regulation for securitization of NPL, which has been clarified, etc. So, on the other hand, and I'm sure Marco will extend a bit more, but the regulator is trying to help the market to be more active and developing in that respect. So that's the sort of the main incentive number one for French banks to be considering NPL portfolio sale. The incentive number two is the appetite from investors. Again, I'm clarifying that I'm acting as an advisor at Societe Generale, not Societe Generale as a seller. But I mean, it's clear that all French banks are seeing regularly investors knocking their doors with the same usual message that they have a lot of money to put at work, that they love NPL, etc. And these sellers are not immune from these messages, and they're considering that good opportunities may be on the table. So the variety of investors, the number of investors, the quality, and the amount of money available for NPL purchase has also reduced yield for investors, but also increased prices for the French sellers. All this in a context of not distressed sellers, very organized sales, very organized management process. That's incentive number two, to consider NPL management in that manner. Incentive number three is probably a cultural change in the sense that the French servicers have done a very good work at convincing the community, the sellers and the general community, that they are responsible in their approach to NPL management, in fair treatment or appropriate treatment of the debtors, etc. So everyone is mindful about the necessity to be respectful of certain rules when dealing with debtors, with weak debtors or difficult situation, and sellers, which were sort of reluctant or mindful about their reputation, are now more comfortable on this aspect because the servicers and the servicers have been very good at providing the right comfort for the sellers.
Okay, understood. So Marco, just coming to you, how do you think ECB, or what do you think ECB needs to do more to put pressure or incentivize, let's say, more Western European banks to sell more NPLs from a regulatory perspective?
In a sense, I cover some maybe Southern Europe because the reality is that the GAC schemes in Italy and now the Hercules scheme in Greece has been working relatively well in terms of securitization sales. And what I think is going to be interesting is, as also what Xavier was mentioning, the incentives for and the changes for the capital treatment of NPL securitizations. That clearly will play an important role. Let's see whether, because the changes have just been made, whether they will be and how they will be implemented and how many will follow the route of, let's say, undergoing NPL securitizations. But I think what is also very interesting, and Alex actually touched upon a bit, was also we need to also take into consideration the European Commission action plan that was published in December 2020 regarding also the situation for the securitization market. And what is very interesting is that there have also been quite an important consultation over the summer period, both from the European Banking Authority on the revision of their NPL transaction templates, and as well as from the Commission. So I think what is very interesting, in particular, in the view of potentially in the future creating an NPL European common platform. So I think what is interesting is in a sense. Xavier said there are now more incentives to do NPL securitizations, but also there is a kind of pending regulatory framework, and there has been the approval of the secondary market directive recently, or at least an important vote. And what is, I think, going to be interesting is how it unfolds, the potential implementation for the EBA templates probably comes in 2023.
Yeah, thank you.
I mean, just from my, just to add to that, what Marco said, I'm always wondering, when you think about incentivizing, the banks to dispose of more, the question is what part of the equation within their own profitability actually plays that. At the end of the day, when you're pretty strong in terms of capital, that part might not really play a role, but I think we have a unique environment right now where margins are being squeezed. I think the originators have problems to maintain the level of lending they've seen in the past years. I mean, people have taken personal austerity during Corona. NPA ratios, or actually delinquencies, that are high at record lows. When you talk to consumer lenders, that is what they currently really deal with. So, I think the banks in general might have more marginal cost pressure than, at least we're talking Germany or France, than in general an NPL issue to resolve right now. It might not be at the forefront of their consideration at this very moment, at least in those jurisdictions.
It's a very good transition to the next question, which is, so far French and German banks have been more opportunistic in terms of NPL sale.
Yeah.
Do you think they will consider a bit more strategically the NPL sales going forward? Because at the end of the day, their Southern European peers or even the Northern European peers have been more strategic in the way they have managed, NPL so far. So how do you?
Yeah, I mean, I'm not sure whether Xavier wants to comment on. I think on the French banks themselves. I think there's always a difference. What I've seen over the years is normally you have international banks that operate in different jurisdictions across Europe. So, and what I found is that sometimes the head office in their let's say home country is a little bit more concerned about reputational risk and pricing considerations. How does it go down for the market if we trade out? Whilst their subsidiaries that just sit in the neighboring country are free to do whatever they want to do in terms of disposal, coming with a very different approach to the market, where you sometimes wonder, okay, well, where's the difference? Why does the group not run an entire strategy? There are only a few, I'd say, including the domestic large ones here that are with their consumer arm across Europe. They have embedded those strategies very properly. And everybody else, and you're absolutely right, in Germany has been very opportunistic. I think where you see a, let's say, strategy that's been embedded and is running well for them is, I think, on the consumer level in particular, where, in Germany we've become better in seeing regular sales. But I think when you talk to the debt purchasers there, and we work, we are a very special investor when it comes to consumer loans, and we also service some of the debt purchases. Everybody's always struggling. It's a great market for the banks to sell because prices are still very stable. The economy is very stable. And even they have seen high recovery rates in the last years when everybody said, okay, due to Corona, things will go through the roof. Nothing really happened. And I think what I'm saying is in Germany, it's so, it will continue to be opportunistic. That's at least my belief. You will have openings due to, regulatory benefits, but I don't think right now, and I won't see it in the next 1 to 2 years, that we suddenly see the market being flooded with new opportunities. But on the other hand, it's a stable market, but it's very high entry hurdles for any investor to go there right now, at least on the consumer field in particular.
Yeah. So on the consumer finance side, French banks have been active, and I think thinking more strategically about NPL sales. But what about, maybe the more retail side of the French banks? Xavier, do you have any view, or more generally about, French banks, how they strategically think about NPL sales, as opposed to opportunistically? Societe has been more active in that front, so.
Banks have taken a different approach to, French banks have taken a different approach to each portfolio. But it's true that the main focus in terms of provision for French banks is on SMEs. Mm-hmm. So the retail SMEs are the sort of immediate possible gain for a bank to sell. So you've seen transaction on the retail side. You've seen transaction on legacy portfolios, which are also retail, residential. As for the consumer, loans, I would say that French banks have used their usual channels for divesting loans, i.e. forward flow agreements, which has been intensified or more sort of more dynamic. So all in all, the sort of the main transactions, large transactions, have been really focused on SMEs, secured, unsecured, but SMEs.
Yeah. Okay. Marco, do you want to opine on from a regulatory perspective?
Xavier and Alexander, because what we have also seen is a kind of a huge increase of consumer loans that are guaranteed from the states, so sort of consumer COVID-19 loans. But the performance of these loans has been relatively good, so at least so far. So we have not particularly, as I said earlier, experience. We still clearly see very low levels of really lack of payments or things like that.
So clearly, banks face challenge to divest. We talked about the reputational risk a lot, but what other challenges face, German and French banks currently, and how can an investor somehow can address them, if you will, going forward? Xavier, please.
Yeah, thank you for the question. I think it's it's part of the very interesting one because we're talking regulation. Is more regulation desired by banks? Probably not desired, but by the community. Is it necessary? I think most people would tend to agree that at least it helps things move ahead. But on your very question, I think that the remaining disincentive to do NPL securitization or barriers currently that we see in the French market are related to IT preparation. So it's a long work and it's a long preparation. Having the data ready for an NPL transaction actually reveals to be an exercise that you need to anticipate years ahead, probably at the time of origination, and then through the chain of loan management. And that requires heavy investments to be ready. So that's one challenge for the bank, to be ready and have good data. I wouldn't say immediately available, but readily available for a portfolio aggregation that could be offered for investor for their consideration. That's probably one challenge. The other challenge that banks are facing is about human resources. If you sell a portfolio, then you're left with employees which are less busy than before. So that requires thinking about reorganization, change, about allocation of people and management of people in general. And in the French context, this is probably something that banks are putting more and more thinking onto, just to try to go around this sort of issue as to what will you do with the staff if you sell a portfolio. Interestingly, you're seeing more some transactions in the French market which are now designed with the servicing remaining with the seller. And that's probably one way to address the HR discussion here, just to make sure that people are not being made redundant or reallocated to other tasks, which is not sort of a press button for this kind of specialist in this area.
Okay. Do we have the same social aspect challenges in Germany as well?
Well, I think what Xavier just touched upon, the HR issue. I see it with mixed feelings, because I think if you have good workout people, you can always put them, if business allows for it, back into the origination, i.e. the credit risk side, etc. I know that on the consumer end, when you have streamlined and very optimized processes, this might be a little bit more difficult. You just can't quickly shut down a call center. I think from the investor, or as our group Philips & Co, we do both, servicing and investing. We're looking at supporting the financial institutions in both ends as well, and that might mean also supporting them on the HR end. Xavier, I don't think you will have to. When you dispose entire units, that's a different question, and I'm absolutely with you. And we had, in addition to that, yesterday's discussion about how to become a little bit more digital in this environment and cater to the needs of customers. I think when you think about that, it's a change management all around. NPLs can be disposed. Fintechs do it that way very early in the process if you wanted to, early delinquencies. But for back to that main question, when you need specialized knowledge about how to restructure a loan, not necessarily directly NPL, but UTP as well, that in-house knowledge and to keep it is quite important. But in terms of what are the changes that the banks need to do, I'd say the German banks, they're very different when it comes to the German banks, and when you have international subsidiaries. From the French banks' perspective, for example, those that are operating in Germany, they're pretty modern. They're very streamlined in terms of their setup, and they operate under a clear remit what to do, and that includes NPL disposals and or servicing. So I don't think, in particular, every bank has to be the same way. It's never really worked out for all of them. And in Germany, I think the market will remain, as we said before, very opportunistic. I don't see that there is a huge requirement for a change. But I think the banks could do more to optimize their cost structure, i.e. maybe to consider outplacement of some of the works they're currently keeping in-house and combine that with a more digital approach probably. And to be honest, some banks have done that last year. They used Corona to actually revamp some of their IT infrastructure because things calmed down, and that helped to do that. But I think many of them will tell you, well, we still have a long way ahead to optimize our IT infrastructure and become slimmer and more efficient.
Marco, do you want to add any comments on this topic about challenges faced?
I just wanted to expand on what Xavier was mentioning in terms of the data challenges. And from what we see as at European DataWarehouse, particularly for NPL securitizations, using the ESMA non-performing exposure templates, we clearly see that the data availability, the data quality, those are two major issues. And in fact, we tend to help the services in the reporting because the availability of the information is not always there. And I completely echo what Xavier said. So the preparation of all this data, the information, the preparation of the whole documentation set is very important, and it's very important to start very early on.
Adrien, I mean, you're an investor as well. Do you see the same thing? Data has been the biggest issue since mankind was around, I guess, and NPL existed.
Yeah, I agree, actually. Yeah, data has been an issue, and I think in some banks it's not uniform. It comes from different systems, so I think gathering it and extracting it is always like a challenge.
Yeah.
And I mean, talking about the French market, some of the French banks don't use really any intermediary as well, and it doesn't really help also as well to have a uniform way of extracting data. So I think that's one of the challenges they face on top of the other challenges that we mentioned. But investors can, from an investor perspective, we can also offer different solutions, so flexible one where Xavier was saying some of the French banks are keen to keep the servicing, and this is something we can offer as an investor, or do some form of, and we can actually touch on it on the next topic, which is about kind of structuring that the bank can offer if we see an NPL wave. So there are different structuring we can offer to banks as investors. So let me talk about the last topic. So in a supposedly wave of NPLs, so actually more gradual NPL increase over time, how do you think the banks will handle and focus their efforts on? So will they try to do or which solution they would prefer? Do you think they would prefer a straight sell? Do you think they will prefer joint venture? Do you think they will prefer, kind of outsourcing as well, where they will just leave the management to someone else? Or what's your view from that perspective?
Do you want to go first, Xavier?
Yeah, okay. I think there's no one answer to this one. I think banks are putting a lot of thinking currently on their possible strategies. We'll see, I'm sorry, it's not a sort of a very interesting answer, but we'll see a mix of all that. Portfolio sales, not massive amounts, so probably you can call it 200, 500, less than $1 billion portfolio sales regularly by certain banks. Certain banks will also very much focus on forward flow agreement, invest in data remediation to be more ready on that front. Certain banks will use servicing being kept to manage HR. So you will see a variety of all these possible answers, and that will depend as well on whether you want to manage UTPs or bad loans. It will depend as well on whether you're talking about consumer or SMEs, etc. So, but it's true that things are moving ahead, and banks are putting a lot of effort to have a more active management of their NPL.
Yeah, I definitely agree. I think there's no one-stop solution for everybody. I mean, I think looking back at what we've seen in Southern Europe, I mean, the diversity of solutions found, also depending on what product you were looking at, in terms, were you talking about large corporate tickets or were you talking about SME? I mean, we saw the disposal of NPLs and the dealing with it obviously being triggered by state pressure, and those banks started first that could afford it a little bit more, but the state had to obviously support in the ECB. And that might have been initially, okay, we'll test the market, we go out with some single tickets, we gather data on consumer and try to dispose of that, and then gradually they work their way up into mixed portfolios that included basically everything around SME, consumer, a little bit of corporate here and there. I think what we've seen, Italy in particular, you've seen the joint ventures, Spain as well, when the tickets are big enough and when it makes strategically sense. I think some of the banks, and you've seen it with Intesa in Italy, for example, joint ventures have worked out nicely. The question is, will this be a permanent solution for some of the tickets? They retain an interest in the transaction, in the assets, and I think that might be a good way, to keep assets in-house and potentially, maintain also some way of the reputation. You're not showing yourself you're the totally, indebted bank. You're just using a partner to turn around things a little bit. And I believe that there is no one solution for some of the smaller banks anyway. They might be forced to work with advisors. They can't do it themselves. It's also an opportunity cost when you talk about dealing with your NPLs. And the variations, that depend, really require the investors to be a bit more flexible, to be honest. Outright sale, and to your point, they come, knock on the door and say, we've got money. Well, that's not really a unique sales argument to have these days.
Yeah, and also, French banks want to keep a look at the NPLs and how they evolve for their underwriting as well. So they want really to keep an eye. And as you said, I think the level of sophistication we are seeing in Southern Europe in terms of structuring, I think we'll come to it, at least in France and surely in Germany, but I think it will be more progressive. Marco, do you have any other comments to add on this topic? Or?
Yeah, on this point, I think there is what is interesting is to consider the difference between the large systemic banks that have been disposing of assets over the years a number of times. So they have a kind of a strong investor base, etc. I think that is going to be much more challenging for the smaller banks, both in terms of the data, but also in terms of the investors. So I clearly see a big bifurcation in terms of the NPL sales from the large banks that have been, let's say, using the market and testing the water and selling portfolios in the last years compared to the smaller ones that do not have such a large amount of assets and might find this more challenging.
Thank you. The last question for the panel today is, and Xavier, I think you touched on a little bit for the French banks, especially the specific asset class that the banks will focus on in terms of sale. You mentioned SME for France. Alexander, do you think Germany, they will, I know shipping loans have been in the cards, aviation loans as well. So what do you think the German banks will focus on in terms of NPL sales, in the future?
I think it depends a little bit also, how a couple of things will pan out. We're watching inflation closely. You have, currently, and that's something Germany depends on, global supply chain compression. So we're wondering, what does the German Mittelstand going to look like, etc. You have a disruption on the automotive industry. It's turning towards, alternative energy. There are a couple more challenges that German, Mittelstand and SMEs have to normally, or that have normally formed the backbone, have to overcome. And I think, many of those have not taken loans that they would typically take down for new investments because of the current situation from an economic perspective. Will we see, therefore, a big new NPL wave in the Mittelstand, or will the banks focus on that? I think what the banks are doing, like like the industry as well, watching the current environment very closely to say where do we want to invest. They've obviously tightened lending criteria on the consumer end quite a bit these days. They're wondering how long will this will they be able to sustain that. And combining that with a lack of investment on the industry right now, it's a tough one to predict. I simply wouldn't know where a new wave or what is a product the banks would focus on right now. I think with a stable environment you have currently, they were going to continue to dispose of consumer loans. That's for sure. They will look at corporate tickets that they can trade out. And shipping, etc., has been depleted over time. I mean, they have found significant investors to help out on that end. I think the potential might be in some of the niches that nobody has explored really, but otherwise it's a very mature market. You have mature players already, both on the sale as well on the buy end. So, not unfortunately pretty boring, as we Germans sometimes are.
And so from a French perspective, France is more exposed to the hospitality sector, as you mentioned a little bit earlier. So do you think this sector will suffer a bit more, like we could expect more NPL sell on that front, or real estate as well? And actually it also applies to Germany, where the real estate market has been very active. Maybe,
No, certainly they're suffering today. So it's an easy answer. Yes, there are more exposures, bad exposures on these sectors currently. For the rest of the economy, I mean, we go back to your first question, which is how do you anticipate the crisis to unfold? If you believe that growth is ahead and strong, etc., then there will be probably less consumer loan exposures ahead of us. If you're worried with the inflation, then you may also anticipate that consumer loans may increase. I don't have personally an answer. I read what economists are saying. It depends really on where you think the macro is shifting. And for the SMEs, then you get back to the same sort of thinking. Growth, is it a catching up effect? Are we seeing a catching up effect when you see growth today? Or is it a real growth, a sustainable growth, and then PG will be repaid? Or are we anticipating a lot of defaults for SMEs because the growth that we are seeing today is great? Don't get me wrong, I'm happy for that, but not enough. And you will have more NPL in 23 or maybe a bit later. Then that's where the debate is to me on what are the macros.
Okay. Marco.
I just wanted to add a point, which is an interesting one, I think, to keep an eye also the unlikely to pay market. I think not only the NPLs, but this potential segment could be an interesting one for the in 2022.
Thank you. I think that's it, so I'm not sure what time it is, but yeah, we're on time. Any questions?
Over in the southern European countries, we've seen that a lot of the banks have disposed of their servicing capacity. They have outsourced it to somebody else, a specialized party, which has been also something that the Nordic banks have done in the past. No? Now, this has increased the competitiveness of the banks itself, because they recover more and quicker and better. No? But it's difficult to find examples in the German and French banks of them doing something similar. Do you think that this might change?
Well, if I can quickly answer to that, the Nordics, you're right. But when you look deeper in who was it in the Nordics, it has some very Spanish roots. So in Germany, it was the same thing. That's what I was saying earlier on. I mean, there's a generic strategy behind that, and that played out very well for that particular banking group. And I think When you talk about the major German banks, I am sure there are considerations that are going on. And I know there have been discussions back and forth about exactly what you described. I don't think it has been that popular as a discussion point as it was in Spain or in Italy, but I'm pretty sure this will come. And it's already, on a smaller scale happening anyway. We've seen that. I don't know about France.
No, I fully agree with what you said. I mean, the French banks are thinking about options. There are options, and sort of outsourcing servicing is one sort of a possible things. But the French market is less mature than other markets in that sense. So, at the moment, it is an option which is on the table, which is being sought. But it's not sort of the mainstream, mainstream solution that you see in the French market.
Yeah, I think only the large banks can honestly afford it, and some have taken the steps to, let's say, outplace that already in a separate entity that belongs to the group. So the preparations are there for that entity, obviously, to maybe gather another shareholder in the future. But that's to be seen. I think the smaller banks will keep it in-house.
Well, unfortunately, we are out of time. So thank you very much to our lovely moderator and speakers for this interesting panel. We do have quite a jam-packed agenda today. So in a few minutes, we will be having our next panel, which will be on Spanish banking and servicing, which will go into detail of the Spanish banking scene. So thank you.
Thank you.